Hey everyone, welcome back to the channel. Today we stepping into a time machine and heading back to one of the most dramatic moments in financial history. The Great Crash of 1929. This was on just a bad day on Wall Street. It was a seismic event that plunged the world into the Great Depression. What really happened? Let's set the scene. The 1920s, often called the Roaring Twenties, were a time of massive economic optimism in America. Industries were booming, new technologies like the radio and automobile were changing lives, and it felt like the party would never end. Everyone, from bankers to barbers, wanted a piece of the action. And the stock market seemed like a surefire way to get rich quick. A dangerous practice called buying on margin became incredibly popular. This meant people could borrow money, sometimes up to 90% of a stock's price, to invest. Imagine buying a $10,000 stock with only $1,000 of your own money. If the stock went up, you'd make a huge profit. But if it went down, you'd be in deep trouble, owing the bank money you didn't have. This created a massive, unstable bubble. The market was no longer based on the real value of companies, but on pure speculation and borrowed cash. The first cracks appeared in September 1929, when the market saw some sharp declines. People got nervous, but many thought it was just a temporary dip. Then came the week of reckoning. On Thursday, October 24th, known as Black Thursday, panic selling began. The market plunged, and Wall Street's top bankers tried to stop the bleeding by buying up huge blocks of stock to restore confidence. It worked for a moment, but the fear was too widespread. The final blow came on Tuesday, October 29th, a day forever known as Black Tuesday. The floodgates opened. A record-breaking 16 million shares were traded as investors frantically tried to sell at any price. The market went into a complete freefall. Fortunes built over years were wiped out in hours. Stories from that day are heartbreaking. People losing their life savings, their homes, everything. The crash didn't just stay on Wall Street. The banks that had lent out so much money for stock speculation started to fail. When banks failed, people who hadn't even invested in the market lost their savings. Businesses couldn't get loans, so they had to lay off workers. Unemployment skyrocketed, and the roaring economy ground to a halt. This chain reaction spread across the globe, leading to a decade of hardship known as the Great Depression. The 1929 crash taught us some hard lessons about financial regulation and the dangers of speculation. It led to the creation of the SEC to police the markets and new rules to prevent that kind of disaster from happening again. It's a powerful reminder that what goes up can come down, and sometimes it comes down very, very hard. Thanks for watching. If you found this history interesting, hit that like button and subscribe for more deep dives into the events that shaped our world. See you next time.